Struggling to catch the perfect entry before the market takes off? Let me show you a simple trick using the Fibonacci Retracement tool that pro traders swear by. Here's how it works. When price makes a strong move, either up or down, you grab the Fibonacci tool and draw from the swing low to swing high for uptrends, or high to low for downtrends. You're watching the key levels, 38.2%, 50%, and 61.8%. These are your golden zones. For a buy, wait for price to pull back into this zone in an uptrend, then bounce. For a sell, do the same in a downtrend. Look for rejection in the retracement zone. Confirmation? Add a bullish or bearish candlestick pattern before pulling the trigger. Pro tip: always place your stop loss just beyond the 61.8% level. If price breaks past that, the trend might be reversing. And don't risk more than 1 to 2% of your capital on a single trade. Master this setup, and you'll stop chasing trades and start sniping them. Want the Fibonacci tool plus ready-to-use templates? Visit forexmt4indicators.com and download them free today.